Good evening. This is the Elliott wave update for the NASDAQ 100 for Tuesday, October 19th, 2021. The NASDAQ continued to rally today, but looking at the 4-hour chart, one would believe it just rallied all day. And that just is not the case. But I'll get into that in a minute. I want to just show that the market did finally get itself above 15,400, which was important, as I've been talking about, in that it forces the change in the count. And as I discussed on last night's update, I felt this was going to be necessary because of my findings here and in my analysis, the S&P and the NASDAQ are basically just doing the exact same count, really without many differences between the two. And so I felt very confident in making that change, but I felt it was also important to hold to that limit that it needed to break so that I'm not miscounting any particular wave. And so there was at one point that the market got up to 15,398 and then slipped back down and then eventually just broke it into the close. And did pretty well, got up to 428. So it did close above it. Now we're drifting back down below it, which is all fine. Pullbacks are healthy. So, but I want to go and just show a little bit of what the trade was like. I don't need to do it on that level. I actually can do it on this level. If I go back down, let's start with the hourly chart. The intraday trading today, got to open that way up to see it. We had some pretty good confusing little times. And even within these hours, we're over here. This was the opening. Actually, it was the second hour. They just, okay. But the first hour was negative. They drove the market down to the session lows. And looked like they're going to start to break down below 15,300. And then suddenly it stopped. And the buyers just moved in, and the buyers then didn't stop, made themselves known. And then we had basically a $75 rally. And then it just hung out and continued to rally. But then it got very slow. Look at the small ranges. Look at that small range up at the 1 o'clock hour Eastern. Then we had a little bit of a sell-off. And they bought it all back. So it continues to act pretty well in terms of what the NASDAQ does. And we saw that they were actually selling Amazon today. They then sold Google, which recovered. They then started to play and sell what they thought they needed to do in Netflix. Netflix reported today, stock initially ran up to like 665 or somewhere up in the stratosphere, nosedive all the way back down. And now it's sitting just still down about $8 from the close of Netflix today. So Netflix reported today. Tomorrow we have Tesla. And then on Thursday, we have Chipotle, another large company, large stock. So that's why I'm including it. It can have an effect on the markets. Facebook is on Monday. AMD's on the 26th. I don't think it's a part of the NASDAQ 100, but it is a chip stock. So therefore, we're going to see how they're reacting. And then, because we have a lot of other chip makers also, we have NVIDIA that comes out much later. We have Intel, which is a competitor. So we've got a lot that we can look at. And so we pay attention to what AMD is doing. Microsoft is also on the 26th. So that's the biggest one that I will be watching to see how they do. Amazon and Apple are on the 28th. So the bulk of the big boys are next week. Having said that, that's what I think the rally goes into next week. So let's go back out to that 4-hour chart and get down to this count. So I'm going to open it up. Now I did end up updating all the count. And so you can see I've added the cycle 5 on top of this, and I just keep running out of room, and I don't want to squish the chart, but right above that is a super cycle 3rd wave. So what are we doing here, and what is the potential moving forward? I now have taken all this down a degree. So these were minor waves. Now they're minute waves. And these are now sub-minute waves, but it still counts down as a 5. But instead of being intermediate wave 1, it's now minor wave A. Then we had a 3-wave for a minor B wave, and then an additional 5-wave decline, which brought us down in the minor C wave to form intermediate wave A. So that does tell us that we should get more of a flat position going on here, a flat structure. The C wave will still be expected to, wherever it tops out, to be rather crushing and bring the market down and break below 14,368. And depending on how high the NASDAQ gets in this B wave will depend on how much extra deep it may go. So when we take a look, I've added Fibonacci retracements for the B wave. Now I have it as a B wave. Let's do the Fibonacci retracements as that B wave. And so what we have is, they're way out here, but this line, which we've already broke, was the sweet spot. And it kind of did hold for a while, right around 15,317 to 320. And when it broke, it kind of gave us that a little bit extra boost. Next up is the high, the existing all-time high at 15,000. We should be coming in at 08. Yes, 15,708.75. Let's call it 15,709. That's the all-time high right now. And it's sitting right between two beautiful targets for this 5th wave. The 5th wave would be equal to 1.236 times the length of the 3rd wave at 15,663. Then we have the all-time high. Then we have where the 5th wave would be equal to 1.382 times the length, or 138% times the length of that 3rd wave. And that comes in at 15,736. And we have, oh, excuse me, that this, oh, well, that's not right. That didn't come in right. So I have to maybe change that. That came in too high. So let's see what I got going on. Yep, there's the problem. That's 15,708.75. Let's see what that does. Changes just maybe a little bit. So, but again, that would be the next line in. Now, if indeed that this B wave, this intermediate B wave in progress, is going to go and break to new all-time highs and still be corrective, here are the Fibonacci relationships that go along with that. The first one would be is that wave B would be 123, almost 124% times the length of the A wave, right? C waves relate to A waves. And that comes in at 16,024. Big number. Now, what do we have in there? Well, wave 5 would be equal to 200% the length of wave 3 at 16,084. Wave 5 would be equal to 170% of wave 3 at 15,899. That's still a new all-time high, close enough to that 1.236. But let's say they really start to blow the doors off. Amazon blows the doors off. Apple blows the doors off. PayPal, Facebook, Google, Intel, Microsoft, NVIDIA, Netflix, Tesla, all blow their doors up on their earnings. And this turns into a free-for-all to the upside. The next level up for that irregular B wave is that it comes in at 138% of the length of that A wave. And that is at 16,220. Where does wave 5 have any relationship? That it would be 238% times the length of wave 3. Possible? Yes. But I might have to recount and recalibrate what's what within it. And what I was looking at prior, let me just pull this back in here, is that, well, what if this is actually breaking and this 3 ends up being up here? Could, and that's going to change that whole picture. That's going to allow for a whole lot more room for the market to move up into those levels. So, and blow the doors off of all earnings reports. Can it happen? Yes. I'm going to say yes. The NASDAQ will constantly surprise you in both directions. And in honesty, even though that I still consider this the top, the level that completed all of those advancing cycles or sequences, this still could be corrected and go way up here. And then what would be expected? A total collapse in a C wave. And it would still only be an intermediate wave C to produce a primary wave A. Now, if I have to switch this all out, and where this maybe is a 4, and now we're doing the 5th, I can't, because wave 1 is 3 waves. Even if it's wave 1 of whatever, it's still a 3-wave advance. No way, no how is that impulsive. Impulse waves are 5, 1, 2, 3, 4, 5, always, always. They may form a triangle, but you're going to still be able to count 5. There's not a chance I can count 5 in this move. That leaves it in an ABC, period. Now, the C wave, always 5, look what it's doing. It's doing 5. So I can't. That's why that stays A. That's why that stays in place. Others may do it, but they're breaking a rule. And therefore, it's no longer the Elliott wave. They could still use all the methodology, but it's going to be John's. It's going to be Mark's. It's going to be Kenny's. It's going to be, Madeline's Elliott wave, not Elliott's. So what we can do, I think we continue just to climb higher. NASDAQ was not as easy, like I said, to actually trade today. It was just giving little fits and starts, and the drops were a little bit stronger than what you would expect. And to get long and be waiting for it to turn, you were really exposing yourself to some pretty steep drops. Like, say you got long here thinking that we were going to continue and go higher, yet at 54.02 because we broke. Well, it dropped all the way down to 86. So, 24 bucks hanging on to a position. You could be down 1,000, 1,500, depending on your size. And that's what it did pretty much throughout the day. Look at this one. They just came in and the sellers were there and they sold it. But if you were held a long position, you had to hold it and feel the pain. And the same thing here. So it wasn't super easy to trade. And this really presented some confusion. Run it up, run it down, run it up, run it down, run it up, run it down, run it up, run it down. And that, even called chop, did have an upward bias. So in the back of my mind, I'm like, it's gonna break higher. Why? Because we keep getting higher lows, higher lows, higher lows, higher highs, higher lows. It was choppy, but the break would be to the upside, and that's what it eventually did. And because really what this is doing, they run it up, they run it down, switching positions, run it up, switching positions, run it down, switching positions, et cetera, until finally it breaks, and then anybody who's short, still waiting for it, misses. Now they got to cover, and that forces the last little thrust high. Then it just was not as easy of a day to trade as one would think by looking at the hourly chart. Nonetheless, I can't say for the NASDAQ that pullbacks will remain shallow because some of them were not that shallow today. So I think that everything remains open and just continue to follow the moving averages on your 1, 2, and 5 minute chart. Those are the charts that I use for trading. And I keep those in mind. I keep also my support and resistance in line, and where my little bit larger moving averages, like the 20, the 50, the 200, where are they sitting? What does it look like? Are we getting close to them? What it'll look like if we break? Well, that's usually where you're going to get a point on this side. If we're coming down, you're going to get some acceleration to the downside. It just brings out some additional sellers that may choose to, reverse positions there. So a lot going on, but not impossible. So right now, these moving averages are looking gorgeous. Look at that. Still, that's a pretty steep slope moving up. So that's why I don't think the upside is done. Let's go down to the 15. We can take a look. Still 200 sloping, 50 sloping stronger, 20 sloping, but getting up in the way where it could hold a pullback or break and drive it down to the 50. So these become into play even on a 15-minute chart for where you might just get a little bit bigger of a pullback. Right now it's holding that Fibonacci support at 95, drifting down to what, 93, I think it did. Those are all holding. So we still got about another hour before the Asian markets really come online. So I think the pullbacks are going to be on the shallow side, but if they start to break, then you're going to know it's going to be a little bit bigger. But again, you're going to have your support levels. You're going to have additional moving averages to base that off of. 5-minute chart doesn't look all that bad, but you can see that's kind of a little bit of a steep. Got all the way up to 28, dropped it back $28. Very tradable. But look what they did. Down, up, down, up, down, up, down. They worked it down. But it ends up being an A and then a B, and this is the C. So kind of looks like maybe that's just the A wave, but then we get a B wave and another C wave, or they just start to rally all over again. So continue to use your moving averages. The 50 is all entwined up inside there. So on a 5-minute, if it breaks the 50, I'm looking for 79, I'm looking for 55, wherever the position is in between. Because you can see there's not a whole lot between there and there, except this next support and the 200. Okay, so going back out, we now have established a stronger probability that the market will move up the additional 300 points and get itself above the existing highs. I think now it's about a 50 to 60% probable. And between now and next week, yeah, I do see that. Definitively, I think it gets above 15,500. That's for sure. But we know that the NASDAQ can truly just go. It's been putting on 100 points. 100 points, 100 points, 100 points. Actually, no, you're sitting up here. So our resistance, by putting this all together, there's one more layer that I'm going to put on. And that's going to be, I'm going to replace this extensions for the C wave. And they pretty much overlap all the way up to existing levels. So no great surprise there. So I only leave it up so we can take a look at it, but I don't think we need to leave it up because it can get very confusing. But you can see clusters after cluster after cluster with just this, where wave 5 would equal wave 3 at 15,544, so it's all by itself. So it would be surprising if it got there and stopped on a dime and said, nope, that's it, and then started to go. I think it goes to where things are clustered heavier, and that's right in here. So I think new highs are possible, and somewhere up around, 736. It's not all by all that much, but I think that we can get up there. The next stronger cluster is up around that 236 and then up around that 382 level, which still have to remain in the realm of possibilities. And then we have, again, some clusters in that area for both the C wave and wave 5 and the irregular B. So that's how you see we just built it. First, we have the irregular B wave, which is the whole entire move. Then we're looking at the relationship between the A and the C wave of the existing B wave in progress. Then we're breaking it down further and we're looking at the 5th wave as it relates to the 3rd wave within wave C. You can see how they all start to line up. Now we have some pretty good strong areas, zones where we can find resistance to possibly finish the move, turn the market lower, and be on our way. This is where I'm going to end it for today. If you have any questions, please feel free to put them out there in the comment section. Don't forget, if you haven't already subscribed to my YouTube channel, and you'll get notification when all of this takes place, when they get put online. But I always do answer legitimate questions. And so if you've got one, please put it in the comment section below, and I will get back to you. Also, you're always welcome to email me at michael@mjf1partners.com. See you all tomorrow.